What's up everyone, my name is Ale, welcome back to my world of stocks. In today's video we're going to be talking about NIO stock, which is a stock that I haven't really talked about in a while. It's one that I used to own myself, but I eventually sold it and went in heavier on Tesla, which I felt gave me enough exposure to the red hot EV market. However, NIO is starting to catch my eye once again because the stock is currently down an absolutely massive 80% from its highs, which is huge. So in today's video, I'm gonna quickly explain to you guys why it soared, but why it's been crashing again now. Again, down 80% as of today. It's crazy how much it's crashed. And I'm also gonna talk about whether or not I think the stock is a buy at today's unbelievably low levels where it's trading today. So I'm going to share all of that in today's video. I hope you guys enjoyed. Hit the like button if you do. I'll let you know if I'm planning to buy this stock myself, but we've got some fun stuff to cover here. So let's just dive straight into it. Okay, so as you guys already know, NIO is a rising star in the Chinese EV market thanks to their innovative approach. Not only are their vehicles extremely aesthetically attractive with similar performance to that of even Tesla with great range, speed, and even autonomous driving capabilities, but standout features like battery swapping, mobile service and charging, and an artificial intelligence partner right on the dashboard of the vehicle have helped NIO stand out from the pack as a unique and compelling alternative to not just Tesla, but really any luxury type of vehicle that you can think of. However, if you want to become really dominant, you're gonna have to attract the mass consumer market that can't afford those premium price tags of higher end luxury vehicles, and that's something that I've always felt NIO is lacking. In fact, last year, it was reported that NIO vehicles were selling for close to $70,000 on average, which was close to $20,000 more expensive than the average Tesla. To be fair to NIO though, their vehicles actually start much cheaper than that average price because people are just kind of adding on features and that raises that price up. But to give you an example, their smaller ES6 SUV starts at just about 50,000, while their upcoming small ET5 sedan, which is aimed at rivaling the Tesla Model 3, that one starts with a base price of just around 40,000 if you buy it with the battery as a service subscription, but that does also cost you another $150 a month. I know it gets a little tricky here, but basically if you add on that $150 a month package, you get battery as a service. You're basically leasing the battery, you get battery swap features, and it lowers the base price to around 40,000. You can also get that with their SUVs and get a similar price there as well. But still, I would say that without that option, the starting price is more than 50,000, while a Tesla Chinese Model 3 starts at just around 43,000 without the need of any kind of special subscription plan. So the Tesla is still generally considered cheaper. Now, the NIO would technically be cheaper with that subscription plan, but even then, it's not by a giant amount. And at that point, I think consumers would probably be basing their decision more so on whether they want the brand recognition of Tesla versus the custom battery swap feature of NIO rather than, the actual price tag itself. And hey, I gotta admit, I would personally stick with Tesla myself, but if I lived in China and I felt that NIO was a trustworthy brand, then that battery swap feature, that would be a huge consideration for me. I would actually be open to buying a NIO just for that capability of swapping out your battery in like 5 minutes and getting right back on the road again. But again, this will likely vary heavily from person to person and depending on what matters more to them. At the end of the day though, both companies have actually stated in the past that they are working on launching at least one mass market cheaper vehicle each. With Tesla, they've long talked about a $25,000 car that would, in my opinion, probably sell like hotcakes around the world at that price. But those plans have also been put on hold for now since they already have so much demand for their higher margin, more expensive cars. But that's also a good strategy by them because you sell the more profitable cars now while everyone wants them and is willing to pay for them. And then if their growth ever stagnates or their brand starts to lose popularity, then you launch that cheaper $25,000 car and I guarantee you Tesla's popularity will skyrocket all the way back up again. I think it's a brilliant strategy. But going back to NIO, their strategy is actually a bit different than Tesla's. In their case, they've talked about launching a new mass market sub-brand similar to how like Lexus is the premium version of Toyota, and during their last earnings conference call, NIO CEO said that they're aiming to have a price range for all their vehicles of around $30,000 to $50,000 so that they can essentially capture the largest amount of customers without going to either extreme side of the price spectrum. So whereas Tesla sells cars that can go as high as like 80,000, and depending, it can go even higher depending on the features you get and all that kind of stuff. And they're also planning to launch a future vehicle of around $25,000 whenever they decide to do that. Well, NIO is taking a different approach where they want a lower end price of around 30,000 because they think that that's close enough to the mass market where they can still get a big chunk of it, but with a higher margin. And then they also want, on the high end of their spectrum, they want to go up to around 50,000 to target the richer luxury market consumers, but at a more affordable price than those vehicles that would typically cost, closer to 100,000. So that way they can better compete with those as well. So basically a little expensive for low income consumers, but also a little cheaper for high income consumers. And then you basically try to capture the largest chunk of everything right there in the middle. Time will tell if that strategy actually works though, because in my opinion, I still think that eventually you're going to need a vehicle that can get down closer to that $20,000 price tag, especially if you want your brand recognition to grow. You're going to need to see your vehicle out there on the road. You're going to need more people buying it, adopting it, and that'll get people to talk about it. That'll get that brand recognition to grow internationally all over the world. I think you're still going to need to target that lower price mass market, and actually think that there's a lot of ways that NIO could get there. I would personally just remove a ton of the premium features. I would take out autonomous driving functionality. I would cut down on the range and performance. I would use much cheaper components on both the exterior and the interior. And that way, anyone who wants an electric vehicle, even if they can't afford the higher end luxury ones, then they can at least still get this cheaper NIO sub brand around $20,000 or less. And hey, maybe you even throw in that battery swap subscription to get the price even lower, which by the way is an extremely attractive feature just on its own, really helps set NIO apart. I think a lot of people would love to have that in their vehicles, and that's actually something that brings the price down lower. That's an absolute game changer for NIO. In that scenario, I could really see NIO taking off and becoming a much larger player in the EV market. And that's where I would want to see NIO go in the future. Still have your more expensive premium NIO vehicles with all the bells and whistles. If you want that, you can pay for it. But then have this sub brand, get it with that battery swap subscription, get that price lower to 20,000, take out all the premium features, and that's where I really think you would see a lot of wider, broader adoption for their vehicles, and I think that would be absolutely huge for NIO. But that's still speculation on my part because that's not exactly what they're doing yet. But that's where I would like to see them head in the future. However, even besides all of that, in the meantime, I still think NIO is actually doing a very good job of not just developing their cheaper sub brand, but they're also expanding internationally as well. In fact, just this past week, it was reported that NIO has finalized the deal with a government development zone in China to build a new manufacturing plant for NIO's new sub-brand that it's planning to launch soon. Speaking of which, the new plant is expected to start production of new vehicles in just a couple years by 2024. On top of that, NIO has already begun expanding into foreign markets as well, which is something that most of their China-based competitors are not even currently doing. But NIO is already delivering about 100 vehicles to Norway each month and is planning to expand into Germany, Sweden, Netherlands, and Denmark later this year and eventually reach 25 different countries by 2025, which by the way, during their NIO Day presentation, where they showed a map of the places that they plan to expand to first, you might notice that the United States was also illuminated on that map, which I think would definitely send the stock much higher if they ever come out and say, hey, we'll be selling our EVs to Americans this year. There would be crazy hype if that happens, I think. But hey, starting with Europe first, I totally get it. As a whole, Europe has the second largest EV market only behind China and is more than 3 times larger than America. And going into Norway first was also, a really smart move, makes total sense because that's the number 1 country in the world in terms of new vehicle sales being battery electric at a massive 65% market share, while the next closest country is Denmark at just 14%. And you can see on this chart here too that the 6 of the top 7 countries are all European, with China coming in at number 3 and the US coming in at number 8. So they'll essentially be selling their cars in the best possible markets of the world. And given that they're based in China, I think that also bodes very well for them over the long term, given that China is not only the largest EV market in the world, but they also have the largest battery manufacturing capacity at an unbelievable 76%. Nobody even comes close. And that's where, being based in China, that can really help a company like this. It can also really hurt them. China has been known for essentially destroying certain companies that they don't like. And of course, you've got the VIE structure, you've got delisting issues. We'll talk about some of the cons a little later in this video. But some of the pros are it's the biggest EV market, big, battery manufacturing capacity. And if the Chinese Communist government, if they like a company, they can actually support it. NIO was on the verge of bankruptcy at one point, and they essentially got bailed out by the government. So there's different ways that that China could actually help a company like this. So if you've got here like a viable competitor in the massive EV market, kind of an alternative to something like Tesla, but that is based in China, that is a very compelling, proposition there. And so far, at least in the short term, it's really helped NIO put up some very nice growth rates in recent years. Even during the economic destruction of the 2020 and 2021 pandemic, NIO was still able to post triple-digit revenue growth of 108 and 123% growth respectively. Now, coming off of that, the revenue growth is expected to cool down both this year and the next to around 80% and 65% growth respectively. And there's a few reasons for that, which I'll quickly list off for you in just a second. But that, coupled with some other stock related issues that I'm also going to cover for you in just a second, that's caused the stock to get absolutely destroyed this past year. Now, back in 2020, it skyrocketed by over 1,000%. It eventually reached a high in 2021 of about $67 a share, but then it came tumbling all the way down to just $14 where they sit today, which is a massive crash of almost 80%. Now, as a result, their price to sales ratio has now fallen from a gigantic high of almost 34 to a low today of just around 4. That's a much better, much cheaper valuation. And that's really a pretty good valuation just overall. I mean, this is a company that can sometimes grow sales by triple digit percentages. So having a PS ratio of just around 4, I mean, that could easily drop down closer to 1 in just a few years, especially when they expand internationally or if they enter the mass consumer market. I really think that would bring back those triple digit growth percentages, and then you'd see that PS ratio get super attractive if you're still using today's prices to calculate it. Now, of course, Tesla is a much better, much larger, much more reputable company, but just for a fun little comparison, because we keep bringing them up as kind of the golden standard in the EV market, Tesla currently trades for a PS ratio of around 14, and that's after they crash heavily themselves too, because they usually hover much higher around the mid 20s. Anyway, why did NIO stock crash by so much? Well, I'll give you just a few quick reasons, and then I'll wrap up the video with my overall conclusion and what I plan to do myself. But in no particular order, I would say that number one, you had the market itself going through a ton of volatility this past year, with the NASDAQ currently being down close to 30% itself, which is in large part due to the weak economy, which brings me to reason number two, that is resulting in lower growth for NIO as China's economy has been volatile and mostly struggling as it makes its way through the pandemic and is still suffering from ongoing lockdowns in certain parts of the country. In fact, NIO even had to halt production at one point because of the lockdowns that were causing supply chain disruptions for them. And that was even coming off of another production halt that they had to do because of the ongoing chip shortages that have been affecting the entire industry as well. Meanwhile, I would also say reason number three is that during all of this time, competition in the EV industry has only been increasing. You've got Tesla that is already expanding their manufacturing footprint in the country, while also being well ahead of them in Europe with the Berlin Gigafactory. But even still, there's other NIO competitors rising up in China as well, like XPeng, for example, who grew their sales by over 200% last year. And speaking of China, that's probably the biggest concern of all for investors. I talked about some of the pros earlier, but there are definitely some cons with being a China-based company and a publicly traded stock, since NIO stock is currently at risk right now of being delisted from the US market, as they were recently included in an updated list of Chinese companies that need to provide more transparency to US regulators. Now, my opinion on that is that the delisting concerns, they might be a little overblown, because NIO has already stated that they're going to do whatever is necessary to comply with the SEC requirements. And even if they're lying, I believe they still get like a 3-year grace period to work all of these issues out before being officially delisted. Although I might be wrong about that, so you may want to fact check me on it. But if you're thinking about buying the stock, definitely look deeper into that. But I believe they get a 3-year grace period, if I'm not mistaken. Anyways, even with that, NIO is also listing in Hong Kong and Singapore with duplicate shares so that US investors could technically still have a place to trade their stock if they wanted to. Now, obviously, nobody wants a delisting to happen, and that would, of course, crash the stock even more if it does. So it's definitely a real concern, but it's also something that I think a lot of it has been priced into the stock at these lower levels. Again, I think it would crash lower, but I think the risk reward ratio is getting pretty good in favor of NIO when you're talking about an 80% crash. And speaking of that crash, I think that was another reason. I'd say that's maybe the final reason, is that the price was just way too highly valued for the stock to support all of these ongoing issues, especially for a speculative company that loses money and continues to struggle with profitability to this day. So I just think that ultimately NIO stock had to come down to really support the risk that you're taking with a stock like this. Now, overall, I would say that NIO as a stock, it's still the same high risk, unprofitable, speculative stock that it's always been, but I also feel that it's not the same company. I mean, I remember when I sold out of NIO, they were at risk of going bankrupt. Their sales were struggling to grow. Consumers weren't sure if they wanted to buy their cars. They didn't know if they'd be reliable. But today, I think it's in a much better place. They recently produced their 200,000 vehicle. Consumers are trusting the brand more as they see it more on the road. They're expanding internationally, they're releasing more vehicles, and meanwhile, the stock and the valuation is at some of the lowest levels that it's ever been. In fact, analyst price targets are way higher than where the stock is trading today. The highest targets are above 85, the average is about 40, and even the absolute lowest bear target is still about 20, while the stock is currently sitting at just around 14. So the risk reward kind of ratio for NIO, I think, is starting to get better and better as the stock falls. At these levels, I gotta admit, it is extremely tempting to start jumping in. Now, it's a little bit of a special situation for me personally, because if you guys have been watching my recent videos, then you know that I've been trying to move away from speculative, unprofitable companies and invest more heavily in more reliable, reputable companies, which, by the way, have been trading at some great prices because the overall stock market itself has been going down, and that's bringing down some very good, very solid companies. It's bringing them down with it, and so you're seeing some great prices out there for some great stocks. And so I could definitely understand the argument of just stick with those. You'll get a better night's sleep. You won't have to worry about the volatility of a high risk, speculative, unprofitable company and stock. And that's why I'm kind of on the fence here. You've got a stock here that has all the potential in the world. This is a stock that could absolutely skyrocket in the future. If NIO is able to execute, they have all the potential in the world. If they're not held back by the Chinese government, if they don't screw things up for them, but if NIO executes as a company, they've got some great unique features. They're expanding internationally. If they could just become a viable competitor in the EV market, they don't have to dethrone Tesla. Forget about Tesla versus NIO. There's plenty of room for multiple players. If they could become a viable alternative to something like Tesla and continue to expand, this is a stock that could definitely be trading much higher in the future. If you have like a 5 to 10 year time horizon, just have to keep in mind all of these things are going to take a lot of time for NIO to really become a big player in the EV market and expand internationally. These are things that are going to take many years, so you really have to have like a 5 to 10 year time horizon or a lot more. But at this point, after an 80% crash in the stock price, and the valuation looks pretty attractive to me right now, it is very tempting to start dipping my toes in this one. Personally, I'm very much on the fence right now. I'm like literally 50-50 on it. I feel like if it drops a little more, I might start to dip my toes in very slowly in very small amounts. If it rises from here, I might just let it take off without me. But I'm like literally on the fence with this one. But I would love to hear what you guys have to say down below. Let me know down in the comment section. Do you think it's worth it? Are you already buying it? Are you thinking about buying it? Are you kind of on the fence like I am? Or do you think there's just safer options out there where you'll get a better night's sleep? You won't have to deal with the volatility of a stock like this, and you'd rather be buying those stocks right now while the market is struggling. I'd love to hear your thoughts. I might even make a video where I talk about some of the comments that you guys leave and give my opinion on them, because this is such a polarizing stock. People have such strong opinions one way or the other with a stock like this that it might be fun to just run through some of your guys' comments and give my opinion on them. Let me know if you'd like to see that. Drop your comments down below. And again, just to summarize, I could go either way right now. I'll probably have to do an update video for you guys, or maybe in my monthly update videos where I talk about what stocks I'm buying or selling, I might just let you guys know, yeah, I ended up buying a little bit. I ended up dipping my toes in it. Or I might just say like, you know what? No, I held back and I didn't buy it because it was just a little too risky for me still. And there's other stocks that I wanted to buy at the time. But I'm 50-50 right now. I am so close to going either way. But anyway, let me know what you guys have to say down below. And I hope that you enjoyed the video. I will talk to you guys more about this very soon. I'm sure NIO is going to keep coming up on the channel because it is at some very interesting prices right now. But I will catch you guys in the next video. Thank you for stopping by. Hope you're all doing well. Take care. Bye-bye.